Welcome to the Deep Dive. Today we're digging into, well, a question that feels almost universal. Should you buy a home or keep renting?
Yeah, it's a huge one.
It is. It's loaded with financial stuff, lifestyle implications, and let's just say up front, there's really no single right answer out there for everyone.
That's so true. What works perfectly for one person might be completely wrong for someone else. So our goal here in this deep dive is to look beyond just that basic mortgage payment versus rent calculation.
Right.
We really want to explore the, less obvious financial angles and those really personal, non-money factors that play such a big role.
And to try and get our heads around all this, we've looked at a whole bunch of different sources. We've got insights from bank rate studies, a longer-term view from JVM lending, real-life talk from a Reddit thread, a view from a brokerage, an economist's take in the Globe and Mail, and even a cost comparison from Smart Asset.
Quite the mix.
Yeah, so think of this as like a way to get a much clearer, more nuanced picture to help you figure things out. Okay, so where should we start? Maybe with things you can't really put a price tag on.
Exactly. Let's talk about the intangibles. A really big one that comes up again and again is stability. That sense of permanence.
Ah, yes.
Buying a home often brings this, well, real feeling of security. You're not worrying about lease renewals every year or, the landlord suddenly deciding to sell.
That sounds like a huge relief for some people.
Yeah.
Our sources definitely highlighted how important that stability is for folks looking to, put down roots.
Yeah.
Especially if you're thinking about family, school districts. Buying can feel like the main way to lock that down.
Precisely. That long-term predictability, it's powerful. But, flip side is renting offers this freedom that can be incredibly valuable too.
How so?
Well, especially when you're younger, maybe your life situation is a bit more fluid, job changes, relationships, even just wanting a change of scenery. Renting makes moving much, much simpler.
Makes total sense. So you've got the anchor of owning versus the flexibility of renting. What about the actual space itself? It seems like another big difference.
Oh, absolutely. When you own, you're basically the boss of your own space. Want to paint that crazy color?
Go for it.
Yeah. Thinking about a big kitchen renovation, it's your call. You get to really make it yours, tailor it exactly how you like it.
Whereas renting, you're often dealing with rules, right?
Yeah.
Getting permission for even small stuff.
Exactly. And this came up in the sources too, that freedom comes with responsibility.
The maintenance.
Yep. You're on the hook, time and money, for all of it. Now, you get to control the quality, avoid the landlord's special repairs.
Right.
But you're also the one making the call when something breaks at 10 p.m.
True. That responsibility piece is huge. And it connects to that feeling of ownership, doesn't it? Having your own place.
It really does. Several sources mention this. It's not just financial. It's emotional. It's where you make memories. It's pride. You can't easily put a number on that feeling of home.
You really can't. And things like, having a backyard, maybe starting a garden, those lifestyle perks often come with owning a house. You don't usually get that in an apartment.
Good point. And privacy, too. A single-family home, usually more private than apartments with shared walls.
Definitely. Okay, so all these non-money things really show how complex this decision is. It's way more than just numbers.
For sure. But we should probably dig into some of those less obvious financial realities now, the costs beyond the mortgage.
Okay, yeah. We all know about the mortgage payment. But
Yeah.
what else is chipping away at a homeowner's budget?
Well, this bank rate hidden costs of homeownership study really pulls back the curtain. They found that in 2024, the average annual cost for these extra things is, get this, over $18,000 nationwide.
18,000.
A year.
Yep.
Which breaks down to an extra $1,510 per month on top of the mortgage. And that's gone up 26% just since 2020.
Wow. One of the analysts called it almost like a second car payment each month. Okay, so what exactly are these hidden costs?
The big ones are property taxes, homeowners insurance, ongoing maintenance, repairs, general upkeep, and then your regular utilities too. Electricity, internet, cable.
Right.
It all adds up significantly.
And I bet location matters a lot. Where are these costs hitting homeowners the hardest?
Yeah, definitely. The study pointed to Hawaii, California, Massachusetts, New Jersey, and Connecticut as the states with the highest average hidden costs for 2024. Hawaii was top, almost $29,000 a year.
Ouch.
And the maintenance part alone, in places like Hawaii and California, based on that 2% rule of thumb, you could be looking at nearly $20,000 or $17,000 a year just for upkeep.
2% of the home's value just for maintenance. That really changes the calculation, doesn't
Yeah.
it? Where are things a bit easier on the wallet for these extra costs?
Generally, the Southeast and the Midwest seem to have lower hidden costs. States like Kentucky, Arkansas, Mississippi, Alabama, Indiana, they were on the lower end in 2024.
Interesting. And these numbers aren't static, right?
Yeah.
Did they mention where costs have jumped the most recently?
They did. Utah, Idaho, and Hawaii saw the biggest percentage increases in these hidden costs between 2020 and 2024. And the bank rate analyst made a really good point. You absolutely need to budget for unexpected repairs. Have a fund set aside. It's essential.
Solid advice. So, okay, buying can build wealth long term, but these hidden costs are a major, major factor to account for. Now, what about the overall picture? Renting versus buying affordability right now, like in 2025, what did that newer bank rate study show?
Right. Their April 2025 study, renting is increasingly more affordable than buying, had a pretty stark finding.
Which was?
Renting was actually cheaper than paying a mortgage in all 50 of the largest U.S. metro areas they looked at.
All 50. Seriously.
All 50. And what's more, in most of those places, the gap between renting and buying costs had actually gotten wider since the year before.
That's quite a statement. What kind of difference are we talking nationally?
Across those big metros, the average monthly mortgage payment was 38% higher than the average rent. So roughly $2,768 for a mortgage versus $2,000 for rent. That's a pretty big chunk of change each month.
38% higher on average. Wow. And where were the differences the most extreme?
Probably not surprising, those really expensive coastal tech hubs. San Francisco, San Jose, Seattle topped the list.
Let me guess, San Francisco was wild.
You guessed it. In SF, the average mortgage was almost 191% more than the average rent, like nearly triple the cost just to own versus rent there.
That's just hard to wrap your head around. Where were things closer? Where was the gap smaller?
That tended to be more in the Rust Belt cities. Detroit, Philadelphia, Cleveland, they had the smallest differences. Detroit was only about a 2.3% difference.
I mean, 2.3%. That almost makes you think maybe the long-term upside of buying could make sense there, despite the hidden costs we talked about.
It definitely raises the question. The study suggested maybe increased rental supply gave renters more options, kind of keeping rents in check in some places. They still acknowledge the usual long-term pluses of owning equity, inflation hedge, but really hammered home the higher upfront and ongoing costs in today's market.
All right, so bank rate makes a strong case for renting being more affordable, at least month to month in most big cities right now. But we also saw that piece from JVM Lending. They had a bit of a different take, looking longer term.
Yeah, JVM Lending argued that, over time, buying usually still comes out ahead of renting, even with higher interest rates currently.
Okay, how do they make that case? What factors do they say often get missed?
Well, several things. They pointed out the potential for homeowners to refinance later if rates drop. That's a big one.
Right, the refi possibility.
Also, the difference between a fixed mortgage payment, which stays the same for, 30 years potentially, versus rent, which typically creeps up over time.
Good point. Inflation and rent hikes.
Exactly. Then there's home appreciation, the potential for the value to go up. Plus, the fact that people tend to stay in homes longer than you might think. The average is about 13 years.
13 years is quite a while.
And the tax benefits, too. Deducting mortgage interest, property taxes. Renters don't get that.
Okay, so those are sort of the classic financial arguments for owning. Did they add anything else?
They also talked about amortization, how part of your payment goes to paying down the actual loan, building equity.
Right, paying yourself in a way.
Yeah, they even called it a kind of forced retirement savings through that home equity. And lastly, inflation, how it actually erodes the real cost of your fixed mortgage payment over decades, while rent just keeps pace.
So JVM's perspective is really focused on that long game, banking on appreciation, maybe lower rates later, and the stability of that fixed payment versus rising rents.
Okay, interesting contrast. Now let's switch to the Reddit discussion. What were actual people saying? That initial question was basically, why buy if renting saves money now?
Yeah, it was a great starting point, and the comments really brought out all these different angles we've been hitting on.
What were the main pushbacks against just focusing on short-term savings from renting? Well, the idea of homeownership as a long-term investment came up constantly. People saying, you got to look at the math over 5-10 years, not just right now.
Makes sense.
And the rent increases versus the fixed mortgage, that was huge. Plus, all those non-financial things. Stability, control, not dealing with landlords.
Yeah, the not throwing money away argument probably featured pretty heavily, building equity instead.
Oh, absolutely. That sense your payment is actually building something for you. And wanting to maintain the place properly, avoiding the landlord special, as they put it, that was a big motivator too.
Yeah, I saw that. Did anyone make the point about comparing like-for-like properties?
Yes, someone made a great point about that. You can't really compare the rent on a small apartment to the mortgage on a big house. It has to be apples to apples.
So important. Were there people on Reddit arguing the other way, though? Saying renting worked out better financially for them?
Oh, for sure. Some shared stories where they felt buying was actually a financial mistake, and they would have been better off renting and investing the difference. And the idea of renting strategically came up, like renting for a while specifically to save up a bigger down payment for later.
Chart.
And again, those intangibles kept popping up: decorating how you want, peace of mind, good schools, having pets easily, reasons why buying felt right, even if the immediate numbers weren't a slam dunk.
It sounds like Reddit really captured that messy reality, people weighing the immediate cash flow against those longer-term goals and lifestyle wants. Okay, let's look at the brokerage insights now. What did they list as the pros and cons, specifically for renting?
Yeah, the brokerage piece laid it out pretty clearly. For the pros of renting, flexibility was number one, just easier to move if needed.
Right.
Lower upfront costs to security deposit versus a big down payment and all those closing costs. And of course, no maintenance worries. That's the landlord's problem.
That zero maintenance thing is definitely appealing to a lot of people. No weekend plumbing emergencies. What else?
They mentioned access to amenities you often get in apartment buildings, gyms, pools, stuff like that. And also easier budgeting, generally, with a predictable monthly rent.
Okay, so convenience, lower barrier to entry.
Yeah.
What about the downsides of renting according to the brokerage?
Well, the big one is you're not building equity. The rent money isn't an investment for you.
It's going to the landlord's investment.
Exactly. Also, limited control over customizing your space, the risk of rent hikes down the line, and less stability: the landlord might sell or not renew your lease. And finally, no tax advantages like homeowners get.
Right, a lot of the themes we've seen, just framed from the renter's perspective. Okay, now for the economist's view from the Globe and Mail. They talked about the total cost of ownership. How do they break that down?
The Economist really emphasized looking beyond the mortgage. They included property taxes, maintenance, sure, but also things like depreciation. The building itself losing value over time, maybe 1–2% a year.
Depreciation, interesting. Not something most people factor in.
Right. And they also included the cost of capital, which means both the interest you pay on the mortgage and the opportunity cost, what you could have earned if you'd invested your down payment instead of putting it into the house.
Ah, opportunity cost. That's a big one that often gets ignored. So when you add all that up, taxes, maintenance, depreciation, opportunity cost, what do they suggest the total cost looks like?
They estimated the total annual cost of owning could easily be 5% or even 6% of the home's value.
5 to 6%.
Yeah.
So on a, say, $500,000 house.
Yeah, that's like $25,000 to $30,000 a year, or over $2,000 a month on top of the mortgage payment just for these other ownership costs.
That really puts things in perspective. What was their overall takeaway comparing renting and owning then?
They argued that, theoretically, in a perfectly balanced market, renting and owning should cost about the same over time. But
the market isn't perfect.
exactly. The strong desire, the sort of cultural push to own a home can distort things, making renting potentially the more financially rational choice sometimes. They even mentioned studies suggesting renters who are disciplined about saving and investing the difference can end up just as wealthy or even wealthier long term.
Interesting. Disciplined saving being the key there.
For sure. And they also recommended using those online rent versus buy calculators to really personalize the numbers.
So the economist's main message seems to be understand all the costs, including the hidden ones and opportunity costs, before deciding. Okay, finally, that smart asset study. They compared total housing costs directly, right? Including all those extras.
Yes, Smart Asset looked at median gross rent versus total homeowner costs, utilities, insurance, maintenance, taxes included across hundreds of large U.S. cities. And their findings really drove home how much location matters.
Where did renting look like the clear winner in terms of total cost?
Cities like Newark, New Jersey, and Oakland, California showed homeownership being way more expensive. In Newark, homeowners paid almost double what renters did each month, all in.
Double. Wow.
Oakland had the biggest dollar difference, over $1,500 more per month for homeowners.
That is significant. What about the flip side? Where did owning look potentially cheaper overall?
Mostly in parts of Arizona and Florida, according to their analysis. A place like Surprise, Arizona, actually had renting being about 15% more expensive than owning when you count everything.
Interesting. So it does happen.
Yeah, they found 17 cities in total where owning seemed cheaper. And one place, South Bend, Indiana, was basically a dead tie. Costs were virtually identical.
So it really, really depends on where you live. What makes financial sense in Arizona might be totally different in California or New Jersey.
Exactly. Local market conditions are absolutely critical to this whole equation.
Well, this has been quite the deep dive. It's so clear now that buy versus rent is way more complicated than just looking at that first monthly check you write.
Absolutely. As all these different sources showed us, there are big financial pros and cons on both sides, and then you layer on those really personal, non-money things.
Yeah,
They can often be the deciding factor, can't they?
they really can. So for you listening, we hope this gives you a much better framework, a broader understanding of all the pieces involved, beyond just that initial rent or mortgage number.
Yeah, and definitely do your own homework. Those online calculators can be super helpful. Plug in your numbers, look at your local market, think about your long-term plans.
Definitely. And maybe the final thought to leave you with is this. The math is crucial, yes. But ultimately, finding home is also about how and where you actually want to live your life. It's that blend of the practical and the personal.